Hi there. It's time to look at the high-speed level 1s, including Solana, SUI, and MIA. If you're new to my session, I'll cover the Wyckoff stage, potential price trend change, key price levels, and these are education content only, not financial advice. Also, the dashboards and newsletters that help you avoid FOMO and panic is now available on Substack. Go check it out. Let's dive into the very first chart, Solana. Solana is at its very early stage of accumulation. Okay, it hasn't shown an upwards of the distribution in terms of the distribution cycle. So technically speaking, there's still a slim chance for it to just shoot up and create another new high. That's, according to Wyckoff method, still a possibility, but not saying that it's of a high chance. Okay, that's why I'm putting the accumulation cycle tags over here. We may be somewhere between the panic sell period and the panic over stage. All right, it's just stabilizing over here. But why I'm not declaring the panic over yet? Because if you look back to what happened here, back in 2022, okay, just 3-4 years back, after the initial drop, it's got a mini rally, like what happened over here. This time we've even got a smaller one before the price drops real deep. Okay, remember, like the saying goes, history doesn't repeat, but it rhymes. And the way it rhymes in these Wyckoff pattern, don't expect that every time it's going to give you such a rally. Sometimes it can break into very small sideways trading. Okay, that can be a smaller rally. This can be a smaller rally as well. That's the reason. Not until the point I see very low volume, which the past 3 weeks is definitely very low volume. Not until that point, I would say the panic over stage is seemingly there. And one additional thing to confirm is the automatic rally. So that's where the whales or the bulls and bears set the trading range top. Look at what happened over here. All right. It's got quite high volume, slowly dying down. And at this level, one big sell and drops back to a very low level with the automatic rally. Okay, a bunch of white volume came in, setting the trading range top at $29. The price continues to travel between that red line, $12 to $29. That's where the range got defined, and that's when the whales check out the last bit of paper hands, letting the price get up, do their last checkout, and then shoot up to the next formal high. We are not seeing that yet, okay? Or at least we're just at the very early stage. The accumulation can start at a higher level, okay? I'm not saying it must go back to the range between the red and the green, $12 to $40. That's not the case, okay? Sometimes accumulation can happen at a level way higher than the past, given the environment has changed, and the crypto industry has changed a lot as well. Plus, things like quantum-proof crypto and AI development, all that are going to add to the picture. For crypto industry, from the time we've got 10,000 projects, everybody, chiming in a little bit to every project, to a stage where I see we've got much less projects, may it be a few hundred. That's going to be the core to drive the development of Web3 or crypto industry. That's where people's money will once again go back to the quality ones instead of like picking cherries, spreading across and see which one pops up. Now, here, given the backdrop, let's get to the micro view. This week, as I said, when we did our session last week, it is marginally outside of the downtrend that started way back in September last year. Okay, we have to be very, very careful when this happens. Sometimes this is just a fake out, especially like what it's doing right now. It's basically traveling along the ceiling of the box. Let me make it a little bit thicker. So if you're watching on a mobile phone, it's easier for you to see this downtrend. What can give us a confirmation? Okay, given, right after our last week's session, the price dropped below this uptrend support. Okay, it did not stay like we discussed last week. It was supposed to challenge the red key level $89 by mid-April. It did not happen. It fell below this uptrend support line. So that's why it's getting more interesting now. It is going to, or at least 2 days ago, it was almost touching the purple key level of $75. We're testing this. It can still happen. Not sure whether there's some issue with this Binance chart. Just to confirm, sometimes if you have a question, it's better to check. Yeah, it's definitely Binance. There's something going on with the data. So the volume isn't actually as low as the chart we have seen just now. Let's say it's just about average, compared to what we had November all the way to January. Slightly higher, but not too far from that average. So this level remains more or less the same, with just more condensed while reaching that average. So I can say slightly more active than the end of last year. Going back to the chart where we have all the drawings, because the moves of the candles are still pretty consistent, even though the volume isn't correct. I'll migrate this to another chart at some point. So if this is really a short-term downtrend, a mini one, okay, let's say that's the direction it is heading now. This April 7th doesn't matter anymore because it's not traveling within the box. More important is this now, April 15th. Okay, if the price continues to come down along this mini trend and challenge the $75 support line, when it gets to this triangle, get closer to mid-April, it has to confirm one thing, in the next 10 days. Either it breaks above this downtrend. What it confirms likely is that the sideways trend between 75 and 89 is still in effect. Okay, that's the base case. The more positive case is that it's once again come up to challenge the 101 orange key level. But now it has two resistant lines to pass through. It's the red line plus this yellow dash line. Okay, so it's going to take the bulls a little bit more effort. Next is if, for option 2, it breaks below the 75, which can still happen. Look at what happened over here, just in February. If it continues with this downtrend, in the history of Solana, back in 2022, 2023 accumulation cycle, that's where it has dropped further to those levels. Not saying I wish to see that happen, but it's definitely a possibility. Like I explained in the beginning, according to Wyckoff method, so far I haven't seen the automatic rally, at least not a clear one. If you say the mini one, if that's the case, there's still, even if the panic over stage has arrived, there's still a chance for the price to go back to test lower levels. Okay? In a lot of charts, you see the subsequent test went below the panic over stage. All right, so for Solana, this is definitely as uncertainty at this range. Next, SUI. SUI, okay, exactly like what I described for Solana. Even after that panic over stage, you can come down for a deeper test. All right. Let me take out this one. Doesn't matter. Because the way I look at it, you can just call them tests. Okay, whether it's the second test, third test, fourth test, it doesn't matter. The key thing is the whales are shaking out paper hands during the accumulation cycle. So when the time comes, when good news line up, when they see the stars line up, they are going to let the price shoot up. So still, early, mid-stage at best for SUI. In terms of daily, it has edged outside of the downtrend. Okay, just slightly. So be careful with this one. We have to adjust if we see it's not very tight, especially in these shorter term contexts in the daily chart. Sometimes if we don't adjust when the price range gets wider, we would miscalculate or misinterpret that it has broken outside of the downtrend. It technically hasn't yet. It actually, like I said last week, somewhere along the line of early April, we would get the confirmation, either get rejected by the ceiling of the downtrend or find support from the liquidity level of 88 cents, breaking outside of the downtrend. It took the confirmation that it's coming back down to test these levels. So here we see an invisible line that's seemingly supporting the price at this range around 84 cents. Okay, it may provide intermediate support, but it's probably not something long term. We see these interchange levels back in 2024, 23, all the way to summer 2023. Okay, that's why we see bounces here, but it's not a strong level. If this downtrend continues and the bulls aren't finding any support from the economic data that's coming out, or even when the new Fed chair sits in, like comes into report duty, of course, impacted by the war as well. Any of these factors are going to suppress people's risk-on behavior, then the chance of coming back to test the 75 cents is still valid. It happened back in February. There's no reason why it cannot happen now, because back then, there was no war. Right now, we have more uncertainty. Okay, and people are going to speculate a lot, and if they put their bet on the wrong side, that's when they need cash. And where do they draw cash from? Anywhere they still have things to sell. Okay, so this is the tricky bit that we are seeing for SUI. So let me draw the date for this. If it continues heading towards the 75 cents. To confirm the downtrend is over, the window is around the 17th, when we get closer to the mid of April. Assuming the price still getting rejection from this ceiling, that's the opportunity for the two choices, okay? Continue with the downtrend, breaking below the resistance of, the support of 75 cents, or breaking this resistance, at least traveling sideways, if not bouncing back to challenge the 99 cents. NEAR. What's happening with NEAR? Okay, it's still within the testing phase. The way I see it is it's already pretty clear that the downtrend is right there, but when we get to the daily chart, we will see clearer. The volume is staying low after end Feb, early March, with a little bit of excitement came in that challenge. The $1.4, let's put it this way, make it easier. That's the level the October 10th tariff announcement date set. Okay, that's also the level back in 2023 summer, or even the beginning of 2023, was actively traveling along or trading around. So this range that we are seeing, 1.01, the orange key level, to the $1.40 range bound, is the base case if no big news come out. So that's not a surprise if it continues to bounce here. Just that what we have been measuring, or the channel box we have drawn, I say we have to adjust as long as it still makes sense. So we've got this low, this too high, and then the past few days, people have been testing this low again with not much commitment from the bears. Okay, very low volume. This over here is interesting. Pretty high volume, just slightly upwards, meaning quite a number of people on both sides were playing on that date, but neither side is able to move the needle. Okay, you see this very short candlestick body, but the volume was very high. So some people were actively selling, but also some people were actively buying at that range. So the bulls, you can say they successfully defended this support for 6 days in a row since 29th, or right after our last session. So if they continue to succeed, what they are edging towards, assuming this yellow dash line is still going to give them rejection, to the bulls rejection, that date is pointing to 15th of May. But the indication we get here during mid-March is that the yellow dash line seems to be breakable by the bulls now. So if this run continues, they may be able to challenge the $1.6 yellow key level that they failed last time, because the uptrend resistance is sitting right there, rejecting the upward move. This time is different. Okay, you see the ceiling has moved past the yellow line. So the bulls' chance to break the 1.6 is there. They can come up to challenge. And eventually, if this uptrend continues, which there are two timing, one in mid-May, one in mid-June, assuming the price continue to trade, and if they get rejection from any of these two lines, the yellow dash and the yellow solid line, those 2 days are going to tell us, is it going to drop back, okay? Or is it going to break those resistance and go challenge the higher levels? The green 1.96 is a level that's been set during mid-January. Okay, right over there. So that's going to be significant if the price comes back to re-challenge 1.96, because not only during January, the price came to challenge this level. That level was also where the panic overstage, the selling climax, and the second test was. Okay, it's going to be a very strong resistance. But once it's broken through there, the range will be way wider, because that's potentially where the sign of strength may come back. Okay, the previous challenges went all the way to 3.16. Of course, people supporting NIA would like to see that happen. Just to be careful, even if the sign of strength comes back, meaning a bunch of white candlesticks with higher than average volume, look at the bottom over here, there's still a chance for these heavy selling. Okay, the last bit of paper hands before the price should hit to a higher level. That kind of retracement can go to the trading range top and stop there, or it can go very deep depending on the situation. Okay, who knows what next? If any news from war or oil price suddenly, do crazy move, that correction, you can say correction or track back, whatever that is, may go deeper than the trading range top of the accumulation. Here, you can say it's around the 2.95. That's this level. So if it shoots up, it can still drop back for retracement before it shoots to the next formal level. So we'll see by then whether that will come true. And if you're interested to access these sessions 2 days earlier, join the other members that are enjoying this advantage now. Remember, the newsletter and dashboards that help you avoid FOMO and panic is now available on Substack at SLS. Thanks for joining. See you in other sessions.